What's up, guys? If you've been following Modern Wealth for a while, you know that I'm a huge fan of the Mega Backdoor Roth, a strategy that allows you to potentially put well over $69,000 into a Roth. However, this strategy usually requires you to be employed by a company that has a 401k that is Mega Backdoor Roth compatible. But what happens when you're self-employed? If you are a solo business owner, even if you work full-time and are a solo business owner in your spare time, this episode is for you because we're going to break down how to enable the Mega Backdoor Roth with a solo 401k. You don't want to miss it. Welcome back, guys. Be sure to hit that like and subscribe button if you like today's content. And of course, if you need help with your own financial plan, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So in order to execute the Mega Backdoor Roth as a self-employed individual, you're going to need a solo 401k. No, you can't do this with a SEP IRA. So you already have a SEP in place. You're going to have to set up a solo. If you are not familiar with what a solo 401k is in the first place, I'll include a link to the episode that we did on solo 401ks, as well as a guide that we wrote on it. Your ability to execute this right is going to be dependent on obviously having a solo 401k and self-employment income, but it's also going to require a specialized adoption agreement associated with your solo 401k plan. If you're not familiar with what an adoption agreement is, it's a legal document that outlines how your solo 401k operates, including the features that it has. Now, if you go to one of the big custodians out there that provides free solo 401k plans, they typically will give you a cookie cutter adoption agreement to get your plan going. Now, for a lot of folks out there, this might actually work just fine because it will give you the ability to do standard pre-tax contributions. However, if you want to do more than that, if you want to do the Mega Backdoor Roth with your solo 401k, a cookie cutter adoption agreement is just not going to cut it. You see, within the adoption agreement, the plan needs to allow for Roth contributions, after-tax contributions, and the ability to convert those after-tax dollars within the plan over to a Roth. Now, if you are wondering how the heck do you get a custom adoption agreement set up to facilitate this, you're going to have to do a little work. So you will need to work with a firm to customize the adoption agreement for you. There are a variety of firms out there that do this. While we are not sponsored by them, and I'm not specifically encouraging you to use them, but mysolo401k.net is an example of a company that you can partner with to create a custom adoption agreement so that you can execute the Mega Backdoor Roth on your own. Now, please note, if you are someone who already has a solo 401k, so you aren't someone doing this from scratch, but you already have one of those cookie cutter adoption agreements in place, you're going to have to do what is called a restatement of your 401k plan. Basically, all this means is that your adoption agreement paperwork is going to get redone. And when it gets redone, it's going to add these features. It's a little bit more work and there's additional steps involved, but bottom line, it can absolutely be done. Now, once you have your adoption agreement all squared away, now it's time to ensure you have the proper accounts set up to execute the Mega Backdoor Roth. Now, this is going to get a little confusing, so bear with me. So your custom adoption agreement allows you to set up pre-tax, after-tax, and Roth sub-accounts within your solo 401k. These sub-accounts are needed to execute the strategy. The problem is most firms don't have a after-tax solo 401k account type. Heck, most firms don't even have a Roth solo 401k account type. But most firms have an account type that is called a retirement trust. Sometimes these are called pension trusts or non-prototype accounts at some firms. But bottom line, it's all the same things. These retirement trust accounts are basically a generic tax-exempt company retirement account that various custodians utilize that allow you the flexibility to create a custom retirement plan. And they typically have these account types because the Mega Backdoor Roth Solo 401k falls outside their umbrella of typical account types. This is something that's not done very often, but these account types allows you to facilitate something like that if you wanted to. So what you're going to do is you're going to take your adoption agreement to a custodian of your choice. Let's say that Schwab, Fidelity, whoever, and you're going to take that paperwork and you're going to end up opening 3 of these account types. One of those accounts you're going to designate as your pre-tax solo 401k account. One of them is going to be your Roth solo 401k account, and the other account is going to be your after-tax solo 401k account. Once you have all 3 of these accounts set up that you were able to set up with that custom adoption agreement, we're now in business. So let's take a look at an example with this all tied together. So let's say that I'm a solo business owner. I'm a sole prop LLC taxed as an S Corp with an $80K salary. Based on 2024 rules, I can put in $23,000 as an employee contribution, which would max me out. And let's just assume I put that in the pre-tax account. From there, I can do an employer match up to 25% of my salary, which would be $20,000 that I could put into my pre-tax account. So now I'm at $43,000 in pre-tax contributions. And all of this money is in my pre-tax solo 401k sub account that I set up for myself. Now keep in mind, the total 401k limit is $69,000. That's the total of employee contributions, employer contributions, and voluntary after-tax contributions. So in this example, since my salary is $80,000, I can put in another $26,000 in after-tax contributions into, you guessed it, that after-tax solo 401k account that we set up for ourselves. So just to recap, we set up 3 retirement trust accounts with a custom adoption agreement. We now have $43,000 in a pre-tax sub account, $26,000 in an after-tax account, and so far none in the Roth account. So now it's time to make the magic happen. We're going to convert the $26,000 in after-tax dollars over to the Roth account that we set up. Once we do that, we have now officially executed the Mega Backdoor Roth. So a couple frequently asked questions that I get all the time on this particular subject. Number 1, will my custodian report any of this? So for example, if you did all of this at Charles Schwab, are they going to send you tax documents and do all this reporting for you like they do with your other accounts? The answer to that is no. You will need to work with a third-party administrator like mysolo401k.net and have them generate a 1099-R for the conversion you just did. Again, this isn't taxable, but you still need to have them generate a 1099-R since you technically did a Roth conversion. Same goes for Form 5500. If you're someone who has to file one, Schwab or whoever you utilize as a custodian for this isn't going to do it for you. You're either going to have to do it yourself or work with a third-party administrator to do it. Second common question that I have is, if I have a job that offers a 401k, can I open a solo 401k for my side hustle? And the answer to that is yes, you absolutely can. However, you need to play within the confines of that $69,000 limit for the aggregate of all your 401k plans that you have. You also need to make sure that you have self-employment income that will be reported on Schedule C of your tax return. So the most realistic scenario that I've seen this play out is when someone is maxing out their company 401k, maybe they get a 10K match, but let's say that they have another $10,000 in net profit from their self-employment consulting business that they do on the side. They could, in theory, make an after-tax contribution into a solo 401k plan that they set up for themselves and convert that over to Roth. Final question I get on this is, how much does this cost? Well, the adoption agreement and ongoing compliance and reporting is going to vary, but it typically costs maybe $400 to $500 to set up. And then maybe it's a couple $100 in ongoing compliance depending on who you utilize. Bottom line, the Mega Backdoor Roth strategy for self-employed individuals is one of my favorite strategies to utilize. It does require some planning and it does take some work, but if you can do it right, it can end up being a really cool strategy that not only saves you a ton in taxes, but potentially allows you to really funnel a ton away into a Roth. If you need help creating a comprehensive financial plan that includes deploying these type of strategies, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. While we don't create adoption agreements, we do a lot of planning around these and help our clients deploy these type of strategies. So if you need help game planning how to get this done, again, don't be shy, reach out. We'll see you next time, guys. I hope you enjoyed it.